J. Knowledge of generally accepted accounting principles. The knowledge of generally accepted accounting principles, GAAP, plays an essential competency because financial planning, forecasting, analysis, and decision-making depend on reliable and standardized financial information. GAAP represents a comprehensive framework of accounting standards, rules, and procedures used primarily in the United States to ensure consistency, transparency, comparability, and accuracy in financial reporting. The Financial Accounting Standards Board, FASB, and Governmental Accounting Standards Board, GSB, are responsible for establishing and updating these standards. Publicly traded companies are required to prepare GAAP-compliant financial statements to satisfy regulatory requirements and maintain investor confidence. FP&A professionals rely on GAAP-based financial information to support budgeting, forecasting, variance analysis, and strategic planning activities. GAAP establishes standardized accounting principles that guide how organizations recognize revenue, record expenses, value assets, and present financial statements. Core objectives include ensuring that financial reports are complete, consistent, and comparable across reporting periods and organizations. Important GAAP concepts include accrual accounting, the matching principle, consistency, materiality, prudence, and revenue recognition. Under accrual accounting, revenues and expenses are recognized when earned or incurred rather than when cash changes hands. The matching principle requires organizations to align expenses with the revenues they help generate within the same reporting period. These principles improve the usefulness of financial statements by presenting a more accurate representation of organizational performance and financial position for investors, creditors, regulators, and management. GAAP is critically important because it enhances trust and transparency within financial markets. Standardized reporting enables investors, lenders, analysts, and regulators to compare organizations using a common accounting framework, improving the quality of financial analysis and decision-making. Without GAAP, organizations could apply inconsistent accounting methods that distort financial performance and reduce comparability between companies. Public companies listed on U.S. stock exchanges must comply with GAAP requirements established by the Securities and Exchange Commission, SEC, while many private organizations also adopt GAAP voluntarily to improve credibility and support financing activities. External auditors review financial statements to confirm compliance with GAAP standards, strengthening confidence in reported financial information and supporting efficient capital markets. FP&A professionals must understand the relationship between GAAP financial reporting and management decision-making because financial analysis depends heavily on accurate accounting data. Budgets, forecasts, profitability analysis, and financial models are typically developed using historical financial information prepared according to GAAP standards. Knowledge of GAAP helps finance professionals interpret financial statements correctly, identify accounting adjustments, and evaluate operational performance more accurately. FP&A teams also analyze differences between GAAP and non-GAAP measures, which companies sometimes use to provide additional insight into operational results. Although non-GAAP metrics may highlight underlying business performance, they must be interpreted carefully because management may exclude selected expenses or unusual items. Understanding these differences strengthens analytical accuracy and financial communication effectiveness. GAAP continues to evolve as business practices, technology, and global financial markets become increasingly complex. Organizations must adapt to updated standards related to revenue recognition, lease accounting, financial instruments, and disclosure requirements. FP&A professionals therefore monitor guidance from FASB, SEC publications, accounting firms, and professional organizations to remain informed about regulatory changes affecting financial reporting and forecasting assumptions. Internationally, many organizations use International Financial Reporting Standards, IFRS, creating additional complexity for multinational companies operating across jurisdictions. Although differences exist between GAAP and IFRS, both frameworks aim to improve consistency and transparency in financial reporting. Mastery of GAAP principles strengthens the FP&A function's ability to support compliance, strategic analysis, forecasting reliability, investor communication, and long-term organizational value creation.